plugged in. It's that conspiracy theory Gen X in me that always unplugs the mic. And we are hot, and this is Get Soft in the Morning. And we are, and it is Thursday, May 28th, 2026. And I am ready to go. And it looks like the story of the morning, if there is one, is Snowflake. Snowflake, of all things, and let's get over to the charts. Snowflake had earnings. I did not do an earnings play, and they were a bit of a beat. They were estimating 31 cents. They came in at 39. Surprise of 22.15%. But more importantly, in other news, Amazon, let's see if I can pull it up. Where the hell is it? Amazon, there it is. Snowflake agreed a multi-year AWS deal committing $6 billion over 5 years to use AWS Graviton CPUs and AI chip infrastructure, aiming to speed enterprise adoption of agentic AI. Boy, does that sound fucking impressive. But, you know, the street likes it. Snowflake is up pretty big, almost 50 something. Let's see, 25. Yeah, I mean, probably about it's up pretty big, 35, almost $35, 35, 40 bucks for shitty, garbagey software that doesn't really work very well. That's kind of trash, and that's why the stock actually got pummeled because, you know, even though they were earning money, nobody was using it. Everybody was using Databricks or more, you know, they were using other products basically. Not even using Databricks. I think Databricks is probably their biggest, but nobody was using it. People were going to Databricks. People were using alternate means. They were using like MongoDB and then just like pumping data in the old-fashioned way because their product sucked. And so it still sucks, but they just got an influx of all this cash. I'm not buying it. You know, I know this is a big pump and that's a lot of money. I don't know if it's enough money to fucking save this thing. I don't know if it's enough money. I'm not saying they're going to go out of business, but I don't know if it's enough money to keep this thing going. Because I don't know anybody who uses it. I don't see it being used. Not that there's no one using it. I kind of see it as a platform that's used in addition to others, but not the exclusive one. So we'll see. We'll see what happens. I mean, I don't know. I'm actually going to short this. Yeah, I'm going to short this today. I just don't see it being sustainable. I'm not going to do anything fancy with it, but I am going to go out here in time, and I'm likely going to go out to either the October. I'm likely going to go out to October on this and sell, and probably not even sell, but probably buy a couple of puts. Likely, I think there should be a decent, it's already collapsed a little bit overnight. It's down to 54. It was up in the 80s as far as volatility because it was up to 94. So it's collapsed an enormous amount. But unfortunately, even if you played this range, They're looking at 81, or that's October. They were looking at, what were they looking for in June? Don't even have it. That's nice. Way to go, Tasty Trade. You know, they pride themselves on like having data, and they don't have Drek. Anyway, typical. But anyway, I'm going to go and look. I mean, I'm not going to go look at it now because nothing's going to be priced right. But I'm definitely going to go in here, and I may even go as much and lean into some calls, some short calls up in the 300 area. Like, I'm going to see where these are priced at. There's no strikes there. This was kind of a blowout, so there's no strikes. So I may even have to wait a day or two to get strikes to be able to do a trade because there's nothing up there at all. So, but yeah, that's kind of sort of, but hooray for you. If you actually played it to the upside that they were going to blow this out, you know, congratulations. It's not really doing much for the overall market though. So put it that in perspective. So even though it was kind of a blowout, it's really, it's not really doing anything to the overall market to push it to the upside. So just be aware of that too. So, I mean, as much as it looks great if you're involved with Snowflake, but outside of that bubble, it's really not having much of an impact. Likely you'll see some other crap-ass software stocks kind of move today. Likely I see ServiceNow is up a little bit. And Workday, I see pre-market is up as well. So it is going to influence those shitbags a little bit too, where there may possibly be deals in the works. And, you know, and to say that, oh, these are all AI driven. I mean, you got to remember, folks, that all these software companies, you know, and I'm not talking about CrowdStrike and like Palo Alto Networks. I'm talking like the Datadogs and the ServiceNows and a lot of these providers. They were forced into AI and forced to use it because they slowly seen their consumer base go away. It wasn't like the other companies like Amazon and Oracle where they are actually putting that in the IBM. They're putting that in the forefront of their whole business model, and had done so for quite some time. They weren't really forced into it. These companies were all forced into it because it was either they started going that route or they were going to see their complete business model just disappear. So we'll see. I mean, I definitely think there's, you know, if there wasn't a bubble in this space, I think there is now, and I think it's more so, probably exacerbated by the Snowflake thing. And so we'll see. We'll see what kind of effects does it have. I'm not buying it. I think it's kind of hilarious. I think it's almost in a way it's kind of like a bailout. It's kind of like a bailout by AWS to provide this as kind of like an exclusive offering through AWS, as opposed to them coming out with their own, which I know they have a couple of things. But who knows? Who knows where that goes? So anyway, that was kind of the story of the day last night. Anyway, after the close, you have that kind of running quite a bit, and it continues to kind of go up too. It is kind of like ticking up as we speak. I actually, you know, if there were strikes, and I don't think there is. To me, this is actually a really nice short. I may even try and day trade short this stock, looking at it as like selling like a 240, because this 240 is probably going to be upwards near $10, I would believe. $9 or $10, just from the volatility that's there and the way it's trading right now. So I would expect that to be around $10. Short that 240 call, right? So you short this 240 call in the first 10 minutes, look for a little volatility collapse, and then look for this price to kind of, back down, because you got to figure there's a decent amount of money sitting on the sidelines that's going to bail out of this at this point after this move, right? And then you're going to also have all the retail and all the other institutions and everything that are going to have to buy this fucking thing. There are people that are going to have to buy this thing just because of their ETF and the way it's structured, and they may even have to buy this damn thing at this price because there's not many stocks left to buy that have room to run or have a story. So anyway, there's going to be that. And then I would look for it to like peter out, and maybe come back down to like 235, even 230. Sometime around 11 or 12 o'clock. So anyway, that's one trade that I'm going to be looking at today. I'm not going to say I'm guaranteed to take that, but to me, that's a really cool day trade just to try and catch, an hour or two of volatility and then a little bit of a collapse on this. And basically, it's like a synthetic short. It's almost as if you're shorting. At that point, it's going to be at the money. So it's going to be almost like shorting close to 100 shares. It'll probably be like a 90 delta. So it'll probably be like 80 or 90. So it'll be like shorting 90 or 80 or 90 shares at that point, which is a lot cheaper selling the call than shorting the stock. Because shorting a stock that's 240, you do the math, the margin on that's going to suck. Margin is going to be about 24K. There it is right there. So a little too stiff for my tastes there. So that's kind of what's going on in the software space. It's not making my position look very good in the IGV. However, you would think, right, the Iron Condor is doing great. The Iron Condor is doing fine. Iron Condor is doing just fine, which was a volatility play. Likely that's going to collapse a little bit today with the snowflake. What's kind of doing poorly is the full out put spread. And what are you going to do? And, everything's not perfect in a bubble. So anyway, kind of mixed bag there, but it just goes to show why I always say, don't just do one strategy, do a couple. Right? Because one might work and another may not, or maybe they all don't work. It's happened too. And they all blow up in your face. But, look, the more strategies you do, the better chances you have of one working out. All right. And then, and you look at this, and then this doesn't even put, with all this action, it still didn't even put Snowflake back to all-time record highs, which just tells you just how much this thing has fell off the earth. And again, even though they've had all this earnings power, it just hasn't moved the stock at all. I mean, it took an influx over 5 years, mind you. So it's it's less than $1 billion a year, right? So again, it looks good on paper. And a lot of things can happen in 5 years. In 3 years from now, Amazon can turn around and say, well, we weren't really, or even a year from now, they can say like, oh, well, not to get bail out of it, but, they could actually change their mind and change things around quite a bit. So anyway, there's Service or Snowflake. I didn't really find it and I'm glad I didn't do anything with it because of that. Now that seeing that blew out the way it did, the only ones we have on deck coming up is a Costco. I didn't do anything in it. I was going to. I just decided to not. But they have earnings on deck, and I think they should be coming out momentarily. Don't think I always recall Costco coming out in the morning, but I don't know. Yeah, it does come after the close. It is after the close. We have Hormel, Dollar Tree, and Best Buy coming out this morning, and Costco coming out after the close. Let's take a look at Costco. Again, problem with Costco is, look, they're looking at a $52 move here, $52. Let's get this going here. $52. Got to get a pointer tool, man. Ain't no good without the point. So $52 expected move over here in June. If you do the, just to be aware, if you do a weekly, the expected move is going to be different. So if you're doing like a weekly this week that expires Friday, it's $29, right? So just be aware of that these shorter weeklies are going to have a little bit different expected move than the full-blown. I always like to use the full-blown monthly. I don't like to use the weeklies. Weeklies are just that. They're for like special situations. So if I'm going to do anything, I'm going to do it in the June. There's 21 days left. Expected move is $52, which looks high relative, but with $1,000 stock, that's really nothing. That's nothing. That is absolutely nothing. Absolutely nothing. But you can see here, it's not very liquid, right? Not a lot of open interest on either side of the chain. And if I were going to land in Costco, I would definitely move up. I would probably be in around this 950. I'd probably do like a 950, 945, right on the bottom of the expected move there on the put side. And on the call side, I would go out to the 1 standard D, and I would do the 175, the 1075, a 1080. And that's about where I would land if I were a gambling man, and I am. And that's where I would land. So about the 950, 945, and then the 1075, a 1080. 21 days left. 62, right? 945, 950, 1075, 1080, Iron Condor, 62% pop. Let me move this so you can see it, get my face out of there. So 62% pop. You're about as delta neutral here as you could possibly be, which is pretty interesting, seeing that you are inside the 1 standard deviation here on the put side, right? You're getting a decent theta. Wish it was a little better, but with an Iron Condor, that's about all you're going to do. And it being $1,000 stock, you're not really going to do much better than that. The only real way you're going to get any kind of theta or strong theta is being in strangles, and I'm just not. price it out at 148. That's not bad. That's really not that bad. You're going to use about 350 of buying power. And I like it. I like it right in that spot. It is up a bit today. It does look it's up about $6 today. So we may have to, this actually will get adjusted a little bit. But I like that trade for earnings on Costco. I wouldn't really do much of anything else. I don't think you're going to get paid if you just sell puts or you just do. And if you try and do something fancy that's not risk-defined, the margins in there are just going to be way too much for any normal person to be able to handle. Because it's $1,000 stock. All right, and so that's my trade in Costco, and I don't really like Dell. I don't like Autodesk. I don't like I don't like Network Appliance or NetApp, whatever the hell you want to call them. They change their name so much. I'm not really a fan of that, and those are really the only ones. And then we're pretty much done with that set of earnings until next week. And so I'm not going to do any of these. None of these actually tend to be, not only not liquid, but usually are kind of stinkers when it comes to earnings trades. So that's it as far as some stock stuff. I did do a couple of things yesterday. What did I do? What did I do yesterday? Did I not do nothing? I did not do nothing, I guess. No, I didn't do anything. I thought I did, but I didn't. I did not do anything. I did not do nothing. I did nothing. I did nothing, and I was happy about it. I did nothing, and it was everything I ever wished it could be. Isn't that from, what was that, Office Space, right? I did nothing, and it was everything I wish it could be. All right, so let's look at some futures here. So there was some downward movement yesterday. Wow. Lo and behold, we did make our record highs, but we did move down pretty quickly off those, and we have been presented with a couple of opportunities. Bounce overnight at 29,791. I kind of like this spot. And if I was going to be looking at a long trade, I'd probably be looking at around that spot. Only because, a second touch, a third, sometimes isn't always the best solution. But given where we are going and where we've been, these have presented as buying opportunities, and it's still kind of a buy the dip type of market. So, I'm going to be looking at that. I'm not going to say I'm going to do anything, but that spot looks pretty interesting to me. Outside of that, the only other areas that look presentable is, I would say, R1 up here at 32.92. So that's kind of it. I'm not going to go look down here because if we're if we're talking 29,435s, there's something really bad going on. That's a pretty big move. We're down 400 or 500 points. I'm not really seeing that as a buying opportunity, although you could, because that's kind of been the trend. But not really seeing it there. So that's kind of where I'm at in the NASDAQ. Couple spots for you to take a look, maybe take a stab. On the Russell, I do like this area down here. Down here, which is about 2,900. In fact, it's about as close to 2,900, if not lower. The bottom of that candle is about 28.98, and the very bottom of that range is 28.50, 28.95. So I do like that spot for a long if it does get down there. The Russell's been very strong, and that is really the only spot that I really would consider doing anything. Everything else is kind of a crapshoot and pretty much a feel for what is going on at that time. So that is it in the Russell. I would be very careful of trying to short up here. You know, if an R1 at 29.44 presents itself, obviously I'm going to try and take that because it's below the all-time highs. And it's still at a level where I could see myself taking a short there as well. Now, going over to, and I think, you know, it's kind of a tale of two tapes. Although we see the market going higher and being strong, the fact that bonds have really stalled here is alarming. Because, you know, unless bonds can really get some juice here, it's going to eventually start sucking money out of the market. Because as I said yesterday, and I've been saying it for a little while now, it's only a matter of time when, look, you know, you're sitting on, and I'm not talking about Joe Blow, who, you know, works Home Depot or, you know, and there's nothing wrong with those jobs, but has a 401k and is dumping, you know, $500 a month in his 401k and some jackass Janus fund or whatever. That's a growth. I'm not talking about those people. I'm talking people, I'm talking like institutions. I'm talking billions. I'm talking, you know, boatloads of money. People who are, you know, there comes a point when you're sitting on those kinds of assets and you're saying, all right, look, I'm sitting on all these gains, markets at all-time highs, interest rates are not budging. In fact, interest rates are rising. And at what cost is it to me to be stressed out and try and find another stock that's undervalued like Snowflake, right? There's not many out there left. And the ones that are left are pieces of shit. So, you know, again, they're looking at the same market as everybody else. And so there becomes a point where it says, you know what? Fuck this. I'm going to go buy a 10-year treasury. I'm going to go buy a 3-year. I'm going to go buy 3-month treasuries. And I'm going to ladder them out. And I'm going to, you know, I'm going to take 30% of my portfolio. And I'm just going to dump it in there. And I'm going to fucking earn fucking 4%. Have a nice day. And you know what? I'm not going to stress myself out over the next 3 or 4 months. And I'm going to sit there. And I'm going to wait for this market to kind of come back down. And I'm going to wait for a lot of these stocks that I want to buy that I'm just are way too high. And I'm going to just sit and ride it out. And I'm going to ride it out in there as long as it lets me ride it out. And if it's 3 months, it's 3 months. If it's 6 months, it's 6 months. If it's 8 months, it's 8 months. I'm stress-free though. You know, and you really have to think of it in terms of a investor, trader, whatever, institutional money that, you know, it's a hell of a lot easier sitting in those. They're extremely liquid, all the treasuries. And, you know, again, to get 4% with no stress and literally no risk, fuck it, I'll do it all day long. And so I think it's something that's not being talked about. And I think it's I think it's a problem. And I think it's kind of I think it's a tailwind that won't rear its head until it does. And it's one of those things where it's not going to gradually happen. It's going to be something that it's going to be drastic and it's going to be a switch. And, you know, these money managers and these big money magnets, I call them, they're all fucking sheep. You know, none of them want to be the last fiddle at the party. And, you know, they'll fucking turn on a dime and they don't give a shit. They do not give a shit. They don't care if they wreck the economy. They don't give a fuck. They're like probably the most, you know, soulless son of a bitch and scumbags on the planet. But that's just how they operate, and just realize, I just understand that. Anyway, so I'm just looking at this as a big headwind. And a lot of this has to do with the dollar being coming back and being very strong here. And it also, kind of reflects on the price of gold. Look at gold. Gold has sucked, right? Gold has absolutely been I'm going to call it for what it is. It's in a bear market right now. And no, I don't think anybody really wants to say that. They're all saying, oh, it's consolidated. It looks like it's a bear market to me because, it's just can't find, here. I mean, here's a 1 hour. Here's a high, lower high, lower high, real low. It came back. It looked like it was going to have a resurrection, and then what's happened since? Lower high, lower high, lower high. It's been and a lot of it is attributed to, A, bonds, and B, the dollar being strong. A strong dollar does not make a good gold trade. And so anyway, there's just some little macro type of things that I see going on. I don't know if they're going to come to fruition or not, but just from what I'm seeing, and this is outside of the news. This is all stuff outside of the news. What's going on in Iran? What's going on in nowhere where they're building a data center and people are pissed off? Fuck anywhere where somebody's paying, their electric bill for a 1-bedroom, 2-bath little condo. They're getting fucking raped for $500-$600 a month for their electric bill. It has nothing to do. It's like outside of all that stuff. It's just I'm looking at this data here and looking at the markets, and usually what happens is the markets will tell what is going to happen outside of the news. And so anyway, that's just the thing that I'm paying attention to right now. I can't say that I like it. I do think it's definitely a headwind that you got to keep an eye on, and then keep an eye on those bonds and keep an eye on that dollar. All right, and so that is it. I think I did go about 30 minutes, which is what I wanted to do. I didn't want to. I got nothing else on deck here, folks, for anything. When I start looking at a lot of all these, underlines, you start going down to the SanDisks and the Microns. I think Micron is now was it the 10th now? I think it's the 10th largest company, whatever, something, some ridiculous thing. I think it's they actually said it on a news story, but they are now the 10th largest company in the world by market cap, not by revenue, not by but market cap. You got the SanDisks, you got the Microns, you got the Seagates. Right, even the AMDs and the Intels, these just continue to just rock everybody's world and continue to go. I don't know how it lasts, because at some point again, they're going to be competing. All these companies are going to be competing against a 4% zero risk yield, 4.5%. So again, at some point, with the money piling into SanDisk and Micron, sooner or later there's going to be a switch that goes off and it's going to be wait a minute, it made another all-time high and it's whatever, and it's, it's now $3,000 or whatever it is, now $1,000, and then what next? Where's the money going to come from? So anyway, man, excuse me. Pollen. Terrible. So that's really, really it. I noticed that Mongo, one of my it's actually up today, and I think a lot has to do with the snowflake thing. But I still like Mongo here. I bought a little bit more. I did have a pretty bad day yesterday. It did get kind of clipped pretty hard, down about $12. But it is getting a little bit of a lift from that snowflake thing. They are, I'm not going to say they're in competing business, But they kind of are because Snowflake is kind of like what they call is like a NoSQL whatever. It is a NoSQL offering like Databricks. Like most of these data warehouse type of offerings, they're all kind of like NoSQL, and like Mongo is kind of the premier NoSQL. So I guess they compete in a way. I don't know if it's like a direct competitor, but they are getting a lift from that new move from Snowflake. I'd be surprised to see Amazon. I'm actually a little surprised to see Amazon even up, or even not even like down a few bucks here after that move. But that's really it. And then Meta had a pretty good day yesterday. I don't know how in the hell this place even stays in fucking business. I don't know. Like again, I just wonder. Like, you know, you're selling titty pictures, chicks in bikinis, social media. You know, basically their whole revenue stream is like based on just fluff and bullshit. So I don't know. I don't get it. I don't get it. I never will. But anyway, they had a pretty good day yesterday. It was up $22. I don't understand. But anyway, who the hell am I? So anyway, that's that, and I'm still in the Mr. Softy camp, even though it has been struggling. And I'm still in that camp. I mean, again, this is one of those stocks where I think that, you know, I don't think I would have said it was a value trap 3 months ago. Now, not so much. I don't think it's a value trap anymore. I think it's a true buying opportunity in here. Now, do I think it's going back to $560 all-time highs? No. Do I think it has a chance to go back up to 450? 460, 480, absolutely. So that is about all I have. I don't really have anything else. And then Walmart, I think, you know, now is the time to kind of accumulate Walmart. You know, big sell-off after earnings. There was all that other hip and horse shit that they said that, you know, I don't know, something about, I don't even know. You know, again, I try not to listen to bullshit news, and I try to filter it to like what newsworthy stuff as opposed to just bullshit. You know, look, Walmart's had an incredible run. It's an incredible company. You know, look, it might not be run the way you want to run a company, and they're probably shitty to their employees, but as far as a stock and you're being a shareholder, you know, you kind of have to look through filtered eyeglasses sometimes with some of this shit, right? Do I like the way they treat their employees? Of course not. But you know what? I can't do anything about it. But I do see it as a good buying opportunity here, especially at this price of 118. And as I said, I still think with Walmart, and look, I don't even shop at Walmart. I can't fucking stand it. I won't even walk in Walmart. My wife goes crazy. She's like, oh, why? I'm like, I don't want to fucking go in Walmart. Everybody looks like they're fucking related that works there. That's it. And I don't want to go into a place that's like that. And when I do go in there, I just feel, I don't know, I feel filthy when I walk in there. And it's not that I care about the prices. You know, I'm all about getting cheaper shit. But you know what? I'll pay an extra $1 so I don't have to fucking walk through a store like that. Sorry, that's just the way I am. You know, and if I need something and Walmart has it, I'll go and get that thing and leave. But they don't shop at Walmart. But the volatility has come down a bit in here, but I still think you can sell, you definitely can sell some puts in here, which I did. I definitely think you could still be selling those 115s here in Walmart. Like a lot of liquidity, right? You don't have to worry about that, but I do like that strike, that 115 strike in Walmart. All right, that's it. That's all I got. I'm going to ramble here. It's about 7:30. Nothing's really moving. And as I said, the only thing that I likely going to try and do today, I don't know for sure, but possibly sell into some of this strength here on Snowflake, you know, possibly selling some calls up there, 240, 245, depending on where it is, right? You know, if it opens up closer to 245, I'll sell those. It opens up closer to 240, I'll try and sell those. And it's like a first 10-minute type of trade. And what I'm looking for is I'm looking for a volatility collapse on the open. And then I'm also looking for that pullback where anybody who did buy these on a whim or on earnings are going to be they're going to sell these out. And you will get a little bit of pressure to the downside at some point. Now, whether it's sustainable, I don't know. I mean, maybe it goes up another $10. Who the hell knows, right? We will see. So anyway, I'm going to try and do that trade as well. And so that's it. That's all I got. So have a good one. And